What's up, everybody? This is Jimmy with Trading Decoded. It is June 4th, 2025. It's 3:06 in the afternoon. The market is still open, but if I don't make these videos during the day, I won't make one at night. Now, I must tell you that yesterday I did not make a video, mainly because I just got busy with life. But that said, I did take a very small loss yesterday. It was a red day. So I just want to put that out there in the world. Now, the reason yesterday didn't work out so well for me is if you go back and look, the Qs and SPY were basically in divergence from each other for the majority of the first half of the day. It seemed like when the Qs were going up, SPY was going down and vice versa. And it looked more like ADD was actually moving SPY and not the Qs. Well, the only way I could trade in that scenario was if I was willing to trade against the Qs, which is something I expressly stay away from. With that said, I did take a trade that looked good to me. It was in profit a couple of times, but nowhere near the point where I wanted to get my profit. So I had a stop loss at break even. It did pull back, slippage hit, and I got a little bit more than break even. I took a little bit of a loss. With that said, there was one trade setup that I was looking for, which was a counter trend trade. Now, I don't really teach counter trend trading, although I was expressly clear on what it was I wanted to see in order for me to take a second trade of the day. I wanted to see Qs and SPY both at a very strong resistance. Now, I called this out 11 minutes before it actually became a trade. And as long as those two charts were both at that respective resistance and ADD was printing red, which it was at the time, that would have been the trade that I would have felt comfortable taking a second trade on. I got back from making a cup of coffee 1 minute after that scenario played out, and then I watched the charts drop almost $2 full. So that was a bit frustrating. After that point, I had emotions involved just because I was frustrated and decided to not try and trade myself out of a small red day because it could very likely become a bigger red day. With that said, today felt really good. We found some good trade setups, and I'm going to share those with you right now. But before we do, if you were interested in trying to learn how I trade, I have a book. It's 200 pages long. It's a real book. It's an easy read. It's not super technical, so that if you're not, don't want your head spinning because of way overcomplicated situations, this is the book for you. I assure you that I have a way of explaining things in a way that's easy to digest and easy to understand. Check it out. It's right here. Get it on Amazon. If you'd like to join our Discord community, well, it's free for the first week. I invite you to stop in. Give me a chance. Nothing comes out of your pocket. No credit cards. Just show up. Okay? The link for our Discord is right here or here, whichever one. Jump in there. Take advantage of the free week, guys. Now, without further ado, let's go ahead and take a look at the charts and see what we found today. Much of the same. As you guys know, we like to do a call put scenario. Now, our call line on the Qs was 528.14, and we were hoping to make it up to the pink line. That was expressly what I said 5 minutes before the market opened. To the downside, we wanted to get below 527.70. Now, the move to the downside wasn't going to be big. We were looking for a very quick 35-cent move to the downside, and a much larger move to the upside was expressly how it was stated. And I said, I am going to be ready for calls into the open. Why? Because we're putting in higher lows into the open. I said, the only thing that you want to be dependent on if you're going to play the call put is just make sure that ADD is going in the direction that you're trying to go. I.e., if you're going to take an aggressive trade, guys, put as many probabilities in your favor as you possibly can. Well, as luck would have it, or just price action, if you don't want to call it luck, I don't call it luck. We got big green candle right out of the gate. We saw zero red ever on ADD until 5 minutes after open. We were trending up into the open. You just have to be prepared to bounce. And when it's time to bounce, you bounce. If you don't, you got to sit it out and wait for the next setup, guys. Okay. This trade I took got in somewhere during the breaching of this particular line and rode it up to the pink line. Had an alert set there. Was very, very clear about the entire situation. And it produced a 29.92% win. Good enough for me. I'm happy. I was done for the day, making a week's worth of pay. An old week's worth of pay from when I used to have a day job in 4 minutes. 4.5 minutes if you want to get kind of technical. But nonetheless, Very nice move up, and it did continue up shortly thereafter. Now, I got out because we hit the pink line. Now, if I was trying to hold on to this, which during this chop, I was willing to hold on because ADD was still aggressively pushing up. With that said, when we got here, I did take myself out. Started to be frustrated that I got out, but then I said, you know what, Jimmy? Even if you stayed in this trade, the minute we were at the pink line and Qs started printing red, and along with ADD printing red, I would have gotten out anyway. So I don't look at this as me leaving more money on the table. In order for me to have captured that additional move to the upside, I would have had to break rules, and that's something I try really hard not to do, okay? And I would urge you to do the same. Now, we are looking for this to continue up, and all of our looking left worked out. We did have some people hold through that and made extra money. Then we got to some pretty strong resistance areas on both Qs and SPY. Now on Qs, it was kind of in the middle of no man's land here. SPY, well, it's just resistance up here. And then we started to put in lower highs, and we broke the upward trend. So here's another thing. And I'll show you a better example of this here in just a minute. FOMO is a real thing, guys. And if you haven't felt it, good for you. You will eventually. But if you deal with it all the time, I want to use 2 or 3 examples from today alone that should help you remember why FOMO is usually not a good thing. Now, this is going to sound funny, and you're going to feel like the market does this to you because it knows you're in a trade or something like that. This is obviously not the case. But how many times would you feel like you wanted to jump into a put simply because we were aggressively pushing down or had a big red candle, only to buy that put and watch it immediately go in the opposite direction? And then what happens after that is you usually become a hold and hoper, and sometimes it works out, and sometimes it gets really bad. Today, there were several reasons, and I tried very, very hard to remind people, please don't jump into big moves. You're going to buy the bottom. Inevitably, you're going to buy the bottom. Sometimes you can get lucky by the bottom and it just keeps bottoming, keeps going. But today was a stark reminder as to why we shouldn't do that. With that said, we did break the trend, and we did break support. So this wasn't a super aggressive entry here. And ADD was printing red, and it did get down to a support level, which was the pink line. So perhaps if you were quick, you could have made money on that. We tried to move back up, fell short of the day's high barely, put in a lower high. Yes, we recognize that as a lower high, but guess what? We're also printing green on ADD. Not a good entry for me. We do break down. Now, I wouldn't have bought here, but we have some folks recognize that SPY was at a strong resistance. Qs was near a resistance. The only thing that wasn't in agreement for me was ADD. Not a trade I would take, but some folks don't care about having that extra form of confidence or confluence in their trades. That's okay. It worked out, and it worked out great. We got a lower high. We needed to break the pink line. The next support down was right here. We talked about it the whole time. Said I wouldn't buy here because of ADD, but we are pulling back. Qs are at resistance. SPY is at resistance. And because of the lower high, we're hoping to break support and get down to the next support, which is this double bottom. After we hit that double bottom, we bounced back up, turned that old support, which was the pink line, into resistance. Good start. This is a lower high, and ADD is printing red. This is where I said, this is when I would usually take an aggressive entry for puts. Now, when you're doing this, guys, it's important to know where your stop losses are, okay? Just because you're aggressively entering a trade doesn't mean your odds of winning are better. In fact, you're probably getting in at a time that is less advantageous for you if it doesn't break support, like in this case. So if you're going to get in aggressively when you're assuming you're going to break support, which I'm guilty of myself, and it pulls back and it doesn't break that support, you better know where on the chart your stop loss is. Now for us, it's the lower high that we made, right? That's resistance. So as long as we stayed below the pink line, it was worth attempting to hold on to this trade, hoping that we do continue to break supports and move down. Now, in this case, you would have had to hold through the 10 o'clock candle. I was not in this trade, but I told everybody in our group who took this trade, because I knew it's a great setup. It's one we take all the time. I said, guys, I know a whole bunch of you are in puts right now. I just want you to know that 10 o'clock is nearing. Okay, my bot tells us when there's 3 minutes left, when there's 5 minutes, 3 minutes, and 1 minute left till 10 o'clock. So people cannot forget. Nobody has to remember to say it out loud. It tells you. Now, with that said, they took the risk. The 10 o'clock candle is the gamble candle, guys. You don't know which way it's going to go, whether there's a report or not. You'll never know. So I have come to find that people that are losing trades at the time of 10 o'clock are more likely to hold through the 10 o'clock candle, hoping that it goes in their direction. And the people who are winning trades or in green in a trade already leading into 10 o'clock are more likely to get out of that trade with the guaranteed profits that they have. So because a lot of folks bought the lower high here, and at this point during a pullback, they were red, those same folks were very, very fortunate today. This move stayed below the pink line, thankfully, and then you got an aggressive move to the downside, which made those puts extremely valuable. And then it kept going, and it kept going, and it kept going all the way down to our final support down here. And these are all marked on the SPY chart as well. So this ended up turning into a banger of a trade. I was not in it. I advise against holding through 10 o'clock, but I also know what human emotions do to our decision making because, well, guess what? I'm a human and I have emotions too, and I feel what you feel, okay? And it was funny because we were talking about this during the day, and I look at my group of people like basically like my children. I know when my kids are up to no good. I know when the people in my community are up to no good. So we were all laughing because the trade worked out. That I was able to accurately pinpoint the fact that majority of the people were in puts, even holding through 10 o'clock. With that said, we got into a wedge. Okay, so we moved back up, but not up to the previous lower high, and we put in a higher low. That is a wedge. Now, do we trade wedges? Sure we do, but we don't get into trades until the wedge breaks one way or the other. Now, when we are looking for a wedge break, we also want to see ADD moving in the direction of said break if we're going to take it aggressively. We knew that if we can get through this wedge to the upside, the next resistance was over here. Okay, this double top. So as people are waiting for calls or puts or whichever one that they're waiting to do, we take a look at ADD. 3 minutes ago, it started to print green again. That means to me that we're more likely to break the wedge to the upside. As a result, if you're wanting to take the wedge break, be prepared for calls. That's all. If you got a bias, you're waiting for puts, you had no reason to take the puts. We never broke the upward trend line. We never had ADD in our momentum window as we were nearing a breaking of the trend line. So we did have people take this trade here. And as long as we stay above the trend line, we're still aiming for the resistance up here. I want to point out that this wick right here basically stopped right there. I don't know how much of a winning trade that would have been. Probably not huge, but it's just a lesson in how to find trades with more likeliness to work out for you, not against you. And if it's going to be a paying trade, great. If it's not, price action is king. This is all price action, okay? We pull back down, hit support. Said to everybody, if we are able to get through this resistance here, the next one up should be the pink line. Very easy. Some folks got in when we broke this resistance. Problem is you would have to have gotten through this one too to make it to pink line. So I wasn't recommending anything until we got above this one because then there's enough room to move to make some money. That trade not only broke through that resistance, it turned it immediately into support. And then ADD did start to move sideways a little bit. Fortunately, I had another alert there. We made it up to the pink line again, and profits were taken. Now, we had an uptrend line. We closed below that uptrend, and I said if we can get below support, we'd be looking for this move to continue down to the next support, which is basically where our put line was. And again, guys, this is something we look at all day long, and as you'll see over here on ADD, we had already started to move down. Again, confluence in the direction that we're trying to play. So we break the uptrend here with a candle close below it at 1037. We know our next support down is right here. If we can break that and there's enough room to the next support, that's the trade we're looking to take. Well, all of that happened. We stayed in the puts. We made money. Now we did have a lower high in during that. So some folks waited to get into this trade until the lower high was shown. not a bad idea. That just strengthens the likelihood that we're going to continue down. And it did exactly that. So aggressive traders got in here because everything looked good for the aggressive side of things. Some conservative traders waited for the lower high so that we can more comfortably make it down to that next support, which all happened. After that, we had a slow grind to the upside, finally stalling out up here at one of my orange lines from the morning. And it's just been sideways since then. Well, at least until 12 o'clock when I got off the microphone. So another trade we were looking for and hoping for was to get below the pink line here with ADD going in our favor. And we were hoping to make it all the way down to the put line, which is why this alert was here. Now, Steven, if you don't know who Steven is, well, if you know, you know. Ultimately played some games and ended up triggering that alert only to bounce off of it several times thereafter. And now we're just grinding more sideways than anything. This is a chart that's going to take your money at this point in the day, guys. Contracts get cheap later in the day because your odds of winning become much, much lower. With that said, we're going to wrap it up. I hope you found some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join my Discord community, I would love to have you. The links are down below. And if you'd like to buy my book, because there's good stuff in there, including how to chart the way that I chart, which is really accurate. It's probably the thing I'm best at as far as trading goes. Because with a good chart and good lines, you can make better trading decisions and know when and where to get in and out of your trades with minimal stress involved should you trust your levels. And that's it. Buy my book. It's right here. Lots of good stuff in there. And I hope you all protect your money if you made some. I hope you had a good day in the markets today. Till tomorrow. I love you guys. See you.